2 days event, today and tomorrow in the live market. We'll understand how to initiate equity, commodity and index trade, specifically intraday trade using 1HD software. We'll understand what are the features of that software and how we can initiate options intraday using the 1HD software, and how we can trade weekly options in 1HD software, positional trade also using the 1HD software. The reason of this particular event is many of you are the user of that particular software, and currently we have also released the trial edition of this software. So those who do not have the software, they can test this software for a couple of days. So they can use this trial edition. So this trial edition is free. So you can download and use it. So they also need to know that how we can utilize that software. Though we have given specific videos, how to activate the software, how to do intraday trade, how to use option scanners, all these things. However, this kind of live event also happens monthly once or twice, so that all can take the benefit. Those who are the user of the software, buyer of the software, they will also understand how to trade using this software. Those who are the non-buyer also, they can take the benefit of this particular event. So that is the objective of today's event. So tomorrow the same event will be conducted in the Hindi language. The mode of communication will be Hindi. कल जो प्रोग्राम होगा उसमें हिंदी में एक्सप्लेनेशन दिया जाएगा. आज का ये जो प्रोग्राम है इसमें इंग्लिश में एक्सप्लेनेशन दिया जा रहा है. So what are the things you can able to analyze in this software, you can able to do in this software? Let me explain that. So this software of one standard deviation, as its name suggests that it is 1SD, we used to say one standard deviation software. So 1SD software, what we used to do, we used to calculate the real-time volatility associated with that particular instrument, real-time volatility. Then using the one standard deviation method, we used to find out the price range. What is the most probable price range one should get in that day, and post that finding out that price range, we are using the Fibonacci method to calculate various retracement levels, and buy entry is placed at 0.236 retracement and sell entry is placed at 0.236 retracement level of the trend. So or the price range, and the reference price will be taken either the open price or the previous day's close or the current price based upon the gap it has been created. So that is what the software does. Then what are the segments you can able to trade in this software? So you can able to trade stock future, equity, index future, currency future. All these things you can able to do. You can also analyze for the commodity. You can also do the option weekly and option monthly contracts. You can also use the option scanner and stock scanner. So stock scanner will give you a list of this will be updated at 10 o'clock, this stock scanner. So you will get the list of the stocks which has given the breakout as per the one standard deviation principle. So every day 10 o'clock we will be updating this. So you can use this just to take a reference that what are the symbols which are the stocks has given you the uptrend breakout. So stocks in the uptrend, if you analyze it, it is telling you these are the 10 stocks which has given you uptrend breakout. So this is for yesterday's data. So today's data will be updated at 10 o'clock, 10 a.m. So morning 10 o'clock it will be updated. So this is just the list of reference you can get. Post you get the list of reference, the same stocks trend level you can generate here and follow the trend level. So that is the stock scanner's job. We have an option scanner which will guide you which are the strikes best suitable to trade. So when I say that which are the strikes best suitable for trading, So that suggests that which are the you can say, if I'm going for index future, Bank Nifty, and so 9:30 onwards it will start for this particular software. Monthly options you can trade, option weekly you can trade, you can use option scanner. I have shown you the stock scanner. You can also able to do the trades in the commodities. So these are the features of the software. So these are the features of the software. So this is uh, so these are the features, the same features you will get on the left corner. That top three boxes are there. So here, if you just click here, so here is that icon. If you click here, it gives you what are the segments enabled here for trading: equity, stock, future, option weekly. So previous analysis you can able to check. Option scanner, stock scanner, commodity, same features are there. I am going for the equity and stock future. So I am just going for index, and index just I have analyzed that index, you can able to see here. So it is telling me to buy at 12,108 or sell at 12,073. So currently we are at 12,083. So what we should do here now, and it has gone to 12,097 also, 12,066 also it has come for. So now this is our calculation: 12,183. So 12,000, sorry, 12,108 we should buy, 12,074 we should sell. Currently we are at 12,000. So currently we are at 12,083. What we should do now? Currently the Bank Nifty is trading at 12,083. What you will suggest me as a trader? This is what the calculations I have got. Can I wait? I can sell or buy. Getting that after some time, but Nifty is moving to 12,108. So if it happens, so if it is coming here, so I will be buying the Nifty, and same time I will suggest you here, if you are an option trader, if you are a future trader, must hedge your trade with specific options. So here, once you are buying, you should hedge it with the 12,100 put options. So Pivonic method says that 0.236 retracement above trend used to set, and 0.382 above it conforms. So if you are buying at 12,108, keep a stop loss of 12,063, and you must hedge it. You must hedge it. Without hedging, should not do the future trade. There are various reasons behind that. Many times I have demonstrated that hedging is a good practice, whether you accept it today or if you accept it in future. But hedging is the only one way which can give you a better flexibility in your trade. Whether it is intraday trade, positional trade, you need to hedge it. So hedging is highly essential. So we have done that analysis. Now it is coming to 12,077. It has come, 76 has come. So once it comes to 12,074, we should 74. We must sell Bank Nifty, sell Nifty. So once it comes to the 12,074, we must sell the Nifty. Once it comes to 12,074, 73.6, 74, we must sell Nifty. And if you are selling here, what we should hedge? Can anyone will tell me? We can hedge it with a 12,100 call option, 12,100 call option, 1250 call option also you can take. So nothing wrong in that. So nothing wrong in that. You can take monthly options, because weekly options will have a higher decay. So it is being observed recently. It is being observed that whenever the weekly options we are using for hedging, so that time decays are very fast, and that is also deteriorating the profit potentiality. So have a hedging with the monthly options. So that is the, so it has given you the downtrend breakout. It has given you the downtrend breakout. And then in the meantime, I have just done the downloaded for the ICICI Bank stock future. So stock future of ICICI Bank, this is the analysis has come. 510 rupees and 7 paisa. That is the, this is equity. We will be going for, I'll be going for NSE here, stock future, and I'll be future stock. ICICI Bank also I have analyzed in the desktop edition. So in between the desktop edition also started working. So here 509.7, this is the price now, and we are advised to buy at 510 rupees, keeping a stop loss of 507 rupees 38 paisa, and this will be the targets. And once you are buying at 510, we must hedge it, and if it is 508, we should sell it with one call option. So this is what the stock future also you need to do the same way. So now moving to the Bank Nifty, let me see if it is the desktop edition gives it. It is well and good, or else we will go with the mobile edition. So desktop edition was giving a specific error. So it has now giving us the proper inputs. And for the Bank Nifty, I am just advising here 0.382 level you should make an entry. Why I have advised here like this way? Yes, Bank Nifty base is very high. So wait for the trend confirmation, not for the trend set point. So Bank Nifty, with our prolonged research process, we have found out whenever you enter at 0.236, the accuracy reduces because of its high base value and higher degree of volatility. Base value is 30,000. So it is almost 30% of 1 lakh. So that part, that base also is very high. So 100 points is just a, in fraction of a second it creates that. So if you are buying at 31,999 or 32,000, so you must hedge it with one. If you are buying at 32,000, which option you should hedge? If you are buying at here, all must answer so that I can understand that yes, hedging you can able to do it. Whether you accept hedging or not, without hedging, if you do the trade, that you do the trade, and if you experience it, that will be the best way to judge the things. So future buy means you should buy with one lot of put option. That is a good practice. So like your bike also hedged, your house is hedged, everything is hedged. For a two-wheeler also, 40-50,000 worth of two-wheeler also, insurance is mandatory. Government has made, but for trading, insurance is not mandatory. So one lot of Bank Nifty, which is near to 7 lakhs contract, and so 20 is lot size, 30, so 6 to 7 lakhs contract, but people never think to hedge it. But one bike whose cost is 40 to 50,000, they take insurance every year. So hedging is a good practice. It enhances your profitability. It enhances your liability. Very reasons are there. It is not that non-scientific way you should say that hedging is bad, hedging is difficult, hedging is this or that. Hedging is highly important nowadays in the trade. Very, very important. So if you say, if you win in 50% of trade and 50% of trades are failure, 50% of trades are failure and 50% trades are win trades. And out of these failure trades, if you can manage, your hedging is just compensating in such a way that it makes this to 50% of trades, 25% trades cause you losses and 25% recovers the losses. 50 trades you lost, 50 trades you gain. The loss part of your trade, 50 trades which you have hedged, if that compensate 25% or 25 trades of losses, if it compensate also, your net success goes to 75%. That is the nature of hedging. Let it reduce. Profit is reducing, Rauji. Profit is reducing. Your losses also reducing. That also you have to think of that. So if there is a single way journey, all can be a winner. So my experience says, but I do not know what others' experience says about. My experience says the 10 traders, those who hedge, intraday traders, those who hedge, and the 10 traders, those who do not hedge, that purely depend upon the trend analysis and other things. If I see the performance of the trend traders, those who are hedging, they are performing better. Their returns are far better than the non-hedged traders. That is very important. So that is very important. So Bank Nifty 32,000 if you are buying, you must hedge it with 32,000 put, or you can write up some options also. It is not mandatory that you should buy a put option. You can sell some call option also. So hedging can be done in two ways. If you are buying a future, you must buy a put option, or you are buying a future, you can sell a call option also. So that is also a part of hedging. So this is the Bank Nifty's entry levels, and we'll just go to the current prices. So Nifty, given the downtrend, you are at the downtrend, and Bank Nifty 845, 31,845. This is also at downtrend breakout. Downtrend breakout has given. Downtrend breakout it has given. So once the downtrend breakout has given, so you must sell Bank Nifty now along with the 31,900 call option buy, or you can also sell 31,800 put option or 900 put option also. So that also you can do. So anything you can able to do based on that. So this is the both of them has given the downtrend breakout, and ICICI Bank also we have analyzed and we have seen that. Let us move to a commodity trade. So commodity trade, many of you are often asking me that commodity trade you must. So I am crude oil mini I am taking here. So here it is partially automated. It doesn't have the full automations in this because of the data delays and other things. So if what we are doing here, you have a current expiry, you have a next expiry. Both the parts are there. Current expiry, next expiry. You choose for the current expiry. Current expiry means it is going to be it is going to be the 18th December expiry. 18th December expiry. So here I require two data points. Two data points I require. Open price and current price. It has opened at 4,020. Currently at 4,023. 4,020 and 4,023. So here open price. So 4,020 and current price 4,023. So I can calculate that. So this is the value of the crude oil mini contract for the day. Once it comes to the 3,995, I can think of selling, or once it goes to 4,050, I can think of buying. Now also options also enabled here. Here too also options has come. So options also has come nowadays available in the options also. It's available now in the options now available in the commodities. You can also trade in the commodities in that order. So now coming to, if you are at 6 o'clock, you can. So if you are at a 6 o'clock time, that time what is the current price is there, we can put that current price. Open price will not change, Taoji. Only the current price will change. So current price you can put it, and you can also go on with that. So Nifty and Bank Nifty we have analyzed. You have seen that. So now coming to the option trade, how we can do the option trade. So here Sachinji is asking that what is a growth cluster and decay cluster. Sachinji, in this trend movement, the growth cluster is the most important resistance and the decay cluster is the most important support. So once it move in this order, so if you have bought it, you have to see that it will find out a very big resistance at 32,061. Once it crosses above that, it can go for a different level. and these growth clusters and decay clusters can be utilized once the price enter to the second cycle. So second cycle is 32,123. So 32,123, once this price has come, so that time you will be using 32,061 as your stop loss. So for that also it is being utilized. So now we will be moving to the weekly options and the monthly options. So here, so go for the weekly options. I'm just downloading the data. So now it is fetching the data perfectly. So here Bank Nifty, we have downloaded the data and it is at 31,780 spot level. So here 31,820, Nifty also 12,069. So your Nifty first target is 12,045. Bank Nifty first target already you have seen it. So 31,000, now 31,780, and we have to just see that what price we should. Suppose we have seen there is a downtrend breakout given. So here it involves two parts. Very carefully listen to that. It involves two parts here. One, you have seen in the price analysis, when you did a price analysis, you have seen that the Bank Nifty has given a downtrend breakout. So downtrend breakout means which type of option you should intraday trade. Downtrend breakout you have seen. Quickly you answer so that I can move it to the next section. So downtrend breakout, you got it in the price analysis. Then which type of option you should initiate and how you should trade in the options. Once downtrend breakout has come means you should trade in the put option buy. If you are a buyer of an option, you can trade in the put option buy. If you are a seller of an option, you can sell a call options sell. So buying of put option is advisable, or selling of the call option also advisable. So that is what this says. So now 850 below you have a downtrend. So if I am just going for 31,800 put options analysis. So here, so 31,800 put option analysis. So calculate. So this gives you a great IV. Why this IV is coming today? Today any specialty is there? Why this particular big IVs are coming? So we'll just add that instrument also. So what is any specialty is there today? Today and tomorrow there are two events we have scheduled. Any specialty is now 31,800 put. 5th December. I think that symbol also I have not loaded properly. So 31,800 put index future Bank Nifty 5th December. So 31,800 put. So any specific reason why we are getting this very high premiums now? RBI review. RBI review is there. 5th is the December 5th is RBI review. So we are more concerned about the Indian events. So here there is a RBI review 5th December. Today is 3rd. Only hardly 2 days are left till expiry. However, the premium is 204 rupees. Great premium. So can anyone have noticed that what is the theta value here? 27 rupees. Every day 27 rupees. Now, once that RBI post review, this will further, this particular theta will further increase. However, 5th is the review. We are an intraday trader. It is telling that 204. So it is telling that if you are buying this option, you must buy at 248. Keep 176 as a stop loss. So these are your targets 269, 312, and when you should buy it, when the spot level will come to 31,679. Spot level is referred 31,744, and once it comes to 31,679 of Bank Nifty spot, that time you can buy that things. But currently I will not advise to buy this any options of weekly because of the RBI review. RBI review is pending, so currently I will not advise to buy any options. Rather, you can think of selling specific options. Selling specific options. So Nifty you have sold, it is at a couple of rupees, 10 to 11 rupees profit. Bank Nifty also sold, so 50 to 55 point profit is there. Do compare with the options what you have hedged, how much you are losing there. So you will find out a net profit there. ICICI Bank we have analyzed, so that also you need to take a view that what price we have got it and what price we should have entered the trade. So I am just going for the option scanner. So you have seen how we should initiate the commodity trade. You have also seen that how we should utilize the options instrument. However, options instrument, again I am telling you, options instrument, you must have a look at the external environments. If there is a review, if there is a RBI review or anything, any such thing is there, then you must not enter the buy trade in options. That is very, very important. So you analyze the trade and enter the trade. But for 1 hour, you are not getting the stop loss, neither getting the stop loss nor getting the targets. What you should do? You have analyzed. We have analyzed the Nifty. We have entered the trade, perfectly hedged it. Everything is perfect. So perfectly we have hedged and perfectly we have sold Nifty, hedged it. For 1 hour we are waiting. Neither we got a target nor the stop loss has hit. Stop loss has hit means we have to close the trade, we can reverse the trade. Stop loss is not hitting means we should get the target. If there is no target or neither the target has come nor the stop loss has hit, what you should do? Can anyone will tell me? If 12,045 I am not getting post my entry, so if I have made an entry at 940, by 1040 you should get the first target or the stop loss. If neither of this event is triggering, I must quit the trade and come out. The reason is very simple, very, very simple. Volatility is squeezing, volatility is falling. So once we fall, the fall in the volatility happens, that day intraday trades will not be successful. So intraday trades will give you a maximum success when the volatility should expand or increase or grow. Post your entry, volatility should grow. So volatility is your friend, it is not your enemy. As an intraday trader, volatility is your friend. If your trend breakout happens and post that you do not get the target, that means your volatility is shrinking or falling down. So any other way to know the volatility falling down? From the time of entry, Raoji, not from the time of calculation, time of entry. Any other way to know the volatility falling behavior? So Suraj Jain just attended one program, option program. So he is telling IV rank. So IV rank is another one parameter which can give us a volatility falling. But there is a one more way also there. You can take the first 1 hour's candle gap. 1 hour's candle gap. Candle gap, how you should calculate? High minus low divided by high. Any 1 hour, last 1 hour, last 1 hour. So if you 10 o'clock, 9 to 10. If you are at 11 o'clock, so 9 to 10. So you have to take the last 1 hour's candle gap. So this first hour candle gap, if it is less than the second hour candle gap, 2 hours you have to wait, then only you can get it. So this candle gap technique, you can take 15 minutes also. Why 1 hour? Take 15 minutes, take 30 minutes also. First, last 15 minutes, so if it is 10 to 10:15, 10 to 10:15 time, so this candle gap, 10 to 10:15 time candle gap, if it is less as compared to the 10:15 to 10:30 candle, 10:15 to 10:30 candle, this also gives you a early indication that volatility is going to fall because of the candle gap also you can take. So you can also find out from the candle gap. Any other way other than the candle gap? Whenever the price finds a resistance at the or supports at the 0.5 retracement level of your calculation. So you have done a calculations here. So you have done a equity calculations here. What is the 0.5? 32,022. Here 0.5 also 31,827. So post your entry, if it is finding out a support at 31,827 means not falling below that, or if it is not crossing above 32,022 and moment it comes that it is drifting below, that also one early indication, or that is an indication that you must quit the trade. Volatility is going to shrink. Volatility is going to shrink. So 31,785 you have got it. So 31,785, this is what Bank Nifty has given you. 31,785 just now it has given you, and from there it has retraced. 805 was your first target. Second target was 31,772. Decay cluster was 31,789. So as I told, just Sachinji has asked that what is the decay cluster and growth cluster? Decay cluster is the maximum support. It has touched 31,785. 2 to 3 point below decay cluster, found out the support. From there it has reversed. And Nifty, you have not got the anything. So 31,785. But here the trade is not ending. You can go on trailing the stop loss. So this is the one way you can do the calculation. So now coming to this option scanner, I did all calculations. So once more let me load, so that all values have now changed. So once more let me load all, calculate all strikes. So all strikes are being analyzed here. Whatever the tradable strikes are there, so their IVs, where they should be, so where they should be bought, what will be their stop loss, sell entry will be stop loss, buying target, selling target, all tradable strikes has come here. So here the downtrend has given, I am going to the put options, I need to buy a put option. So here three conditions we have given: greater than equal to, less than equal to, between. So I am just clicking on the between option. So after clicking on the between option, so here strikes to buy or strikes between sell entry and a target. Put options we are taking. So it is just suggesting me two strikes. I can trade in 11,900 put or 950 put. 11,900 put and 950 put. These are the two strikes it is suggesting me for put options. So put options. So here put options, it is suggesting me these two strikes here, and that also it is spot level. It is telling once it is coming to 11,993 spot Nifty, spot level is being used here. Spot Nifty, I can buy these options, keep a stop loss of 88, and these are the targets. When the spot level will move to 11,980, 970, 960, 945, I'll get all these targets will be coming for me. So these two strikes, why? Why these two strikes? Why not other strikes? So these two strikes will have lesser theta decay. So option Greeks, whatever we are finding out, theta means time value decay, vega means volatility decay, or option Greeks, whatever we are finding out, It is not mandatory that market should obey it, or the index, this strike should 100% obey that. So they may accept theta 100%, they may accept theta 50%, they may accept theta 25%. So different strike will accept the theta in different way. So there is a 27 rupees of theta decay, means that doesn't mean that day end this 27 rupees will decay will happen, definitely going to happen. It may be 80% of this 27 rupees can be accepted. Stock theta can be 80%. So out of these, the strikes which will be falling between that day's trading band, very carefully listen, the strikes which will be falling in the trading band, buy entry and targets, sell entry and targets. So those strikes will have lesser theta decay. Strikes which falls in the trading band gives you the lesser theta decay. So based on this principle, these scanners are being designed. So downtrend breakout, we want to buy the strikes which is falling between the sell entry targets. If you are going for the weekly, so means you want to buy and hold, so best weekly put options to buy in the downtrend. So if you just give, so this is giving you some couple of more strikes, you can buy and hold this. So these are the, this is for put options. Same way for the call options, if you are going for call options between, and I want two strikes to buy between buy entry and targets, you will be getting a different two strike, 1250, 1200, 12,100. If you want to hold those strikes, best weekly call options to buy in uptrend. So for 1 week period, so these strikes you can get. So if you want weekly options, this is the same strike, you can just analyze in the weekly options. So option weekly, but it is not recommended to buy and hold the weekly options. Weekly options you can do intraday trade, but I will not suggest you to buy and hold the weekly options. So second time during this event, so Bank Nifty is again touching your, Bank Nifty is touching your cluster, decay cluster level. Second time it is touching that decay cluster level, 31,788. This has to be penetrated. So once that level is broken, you can get some lower targets, more lower targets you can get it. So if you have multiple lots, partially you can book the profit and come out also here. So Nifty, you are still at a profit. You are still at a profit. So Bank Nifty, you are at a profit. So wait for some more targets to come. Some more targets to come. So this is what fundamentally you are studying a company and doing the positional trade for a period of time, or you can do a positional trade for a short term duration, 5 to 10 days duration. So 5 to 10 days duration, that short term duration you can do the trade. So here positional trade, what we have given here, this you must analyze any point during the day. There is no rule in that. So you can analyze now, you can analyze at 11 o'clock, 12 o'clock, 5 o'clock, means 5 o'clock. So when you analyze today, you must enter the trade today itself if that level gives you a breakout. Or if you analyze post market hour, next day if you are getting that level, you can enter. Suppose I am going for Axis Bank's positional analysis. I am just hitting here positional analysis. I want to hold it for 5 days. So I calculate here. So Axis Bank equity, I have just calculated 742 above, it is recommending to buy. 725 will be my stop loss. These are the targets. So Axis Bank equity, if you can see that, what is the price the Axis equity is trading? Axis Bank equity. So 736 it is trading now. 736 it is trading now. 742 above I can buy. Keep a stop loss of 725. These are the targets. These are the targets. These are the targets. So this is how you can generate the weekly level and positional level. Very important part. Weekly trends, if you want to generate. Again repeat, weekly trends. Weekly trends means today you generate, for the entire 1 week it will be valuable. all weekly trends you must generate on the Friday post market hour. Friday post market hour. Use the number of days as 7, not 5. Use the number of days as 7. It will be valid from the next Monday to Friday. So Friday post market hour you can generate. Monday to Friday it will be valid, and number of days will be used as 7, because holidays also money has a value. You earn the interest on money capital on holidays also. For that only it must be generated post market hour of Friday. Number of days should be 7, should be utilized coming week Monday to Friday. So this is how you can generate the weekly levels. Not only Nifty, Bank Nifty weekly levels we used to give. Currently, since we have given the trial edition of the software, so we suspended that report. You can generate in the software. Has given, these are the stocks has given the downtrend breakout. Here also you can see the targets, but these targets are not reliable because this is not taking the not pulling the real-time data points for that. So you can just take the symbol of this thing and utilize in the your regular tool, so which can give you stocks given gap up, gap down, stock given uptrend, downtrend. Between the buy entry and sell entry of the one standard deviation principle, it has opened. So these are the stocks. So by this way, the list of symbols you can get, and the same symbols you can simulate in the software. Rate of accuracy 75 to 85%. Yogesh, you are an old person, you know